Hello, San Diego. This is the June 2023 San Diego housing market update. Let's jump right in. Key metrics. At the end of May, the median home price in San Diego reached $825,000. That's up slightly from the month before, but down by 3.5% over the same time period last year. Market time is down slightly to 28 days. The number of new listings is up to 2639. Month supply is up slightly to 1.6, and the number of sales at 2,225, down 26% from the same time last year. We're seeing prices continue to rise in this market. Take a closer look at pricing. This graph shows pricing over median home price over time. We can see the change between April and May. However, it's important to note that home prices are up by 10.4% since December. They've been increasing every month for the past 6 months consecutively. Take a look at what's happening on the national level, much like here in San Diego, starting in about July of last year, when interest rates started to go up, prices started to come down slightly. And in January, February, and March across the country, we've seen prices on the rebound as we have seen here in San Diego. And so what's going on with that? What's the driver? Well, one of the drivers is a chronic low inventory situation. 3,430 active listings on the market. Compare that to a normal market at this time of year. Typically, we'd see somewhere between 12 and 14,000 active listings on the market. So very low inventory. This slide shows months of inventory of homes for sale and the difference between a buyer's and seller's market. We can see that we are definitely in a seller's market with only 1.6 months of inventory here in San Diego. Definitely puts us down in the bottom of this graph. I've showed this slide before, which shows the relationship between interest rates and buyer demand. And we can see that interest rates have gone up from the last time that I shared this with you by about a half a percentage point. However, for VA and FHA in the low sixes, they're still in an area of good buyer demand. In jumbo and conventional, above 6.5 and approaching 7%, we're getting into limited buyer demand and weak territory for buyer demand for those mortgages above 7%. However, despite the fact that interest rates have risen, it does not seem to have had much effect on the market here in San Diego. I shared this slide with you last month. The market action index, it stayed steady, but I really love the comment here. The market continues to get hotter. More sales demand and fewer homes listed have contributed to a relatively long run of increasing prices. Current supply and demand levels show no sign of prices changing from their current trend. I think that's just a really powerful statement about what we're seeing here in the San Diego market. Low inventory, even though interest rates are higher, the demand is putting upward pressure on prices here in the San Diego market. So ways to improve affordability when interest rates start to go up, we may want to look at some creative ways to improve our affordability. One of those is a 2-1 buy down. A 2-1 buy down simply is a reduction in interest rate for the first year of 2 points under whatever is par, and then in the second year down by 1%. So this can save homeowners or buyers literally hundreds of dollars every month by helping to pay the rate down up front. Also, interest rate buy downs over the long haul of a mortgage can save hundreds and hundreds and literally hundreds of thousands of dollars over the life of a loan. Adjustable rate mortgages, we're not seeing a lot of people use those. However, those are an option in an increasing interest rate environment. Additionally, we are seeing some closing cost concessions, which help buyers conserve their cash for other things that a home may need. And finally, assumable mortgages. We aren't seeing a lot of those, but it's important if you're a buyer to understand, is a mortgage assumable on this property that we may be interested in? the interest rates could be dramatically different than what your lender might be able to offer you today. So what are we seeing out in the field on a real-time basis? We're seeing competition. We're seeing multiple offers. We are seeing interest rate buy downs and sometimes sellers giving concessions to help the buyers with affordability. We're seeing lower market times and pent up demand. So looking ahead, I believe we're going to continue to see prices increase. And I think that sometime in the near future, we're going to see interest rates start to come down. And when those interest rates start to come down, we're going to see a lot of sellers coming back into the market because it makes sense for them to make a move at a lower interest rate, and more buyers will come into the market because homes will be more affordable then. So with that, thank you so much for the opportunity to allow me to share with you. I'm Woody Henderson, broker for American Dreams Real Estate, and we are always here for you. Thank you.